Terrific. Hello, everybody. Thank you for joining us today. My name's Janet King, and I'm the VP of Research at American Banker. And I have the pleasure of being joined today by Cindy White, who is the Chief Marketing Officer for Mitek. Mitek offers enterprise-grade solutions and technologies for identity verification, authentication, biometrics, image capture, and fraud detection. So I'm excited to have you here today. Welcome, Cindy.
Thank you, Janet. It's lovely to be here again and talking on this very important topic. And welcome, everybody, and thanks for taking time to join us.
Great. Well, as a basis for today's discussion, we're going to be sharing some results from new research that we just completed at American Banker on best practices for mitigating fraud, with an emphasis on identity verification and authentication. And this is research that we conducted in April and May of this year. We had 158 professionals from a mix of global, national, regional, and community banks, as well as some credit unions, participate in the research. And we had really two goals for this research program. The first was to explore the best practices that banks and credit unions are adopting to manage and mitigate fraud. And more specifically, our second goal was to really take a look at some of the tools and technologies that are in use today to verify and authenticate customer identity, and to explore how those tools are being used to ensure low friction, secure experiences. So just a quick background on the research and who we surveyed. And again, you can see that the banks or the financial institutions spanned all sizes, but we had about a third from large global and national banks that had assets of $100 billion or more. We had about a quarter who are regional banks, so we're defining those as banks with 10 billion to 100 billion in assets. So that puts more than half of those responding to the survey at banks with 10 billion plus in assets. And then community banks made up the bulk of the remaining respondents, and we had 1 in 10 respondents who are employed at credit unions. I think another interesting thing to note, just to keep in mind as we talk about the results, so you know sort of who we talk to, is that a majority of these banking leaders hold management level titles. More than half are actually in executive or senior management roles, and all of them are directly involved in or have knowledge of their financial institutions' risk and fraud, identity verification, or authentication and or cybersecurity initiatives. So all of that really is just to say that the results really reflect the opinions of fraud and identity stakeholders from banks across the ecosystem. But before we dive into the results, Cindy, can you just take a minute to talk about why Mitek was interested in partnering with us on this particular piece of research?
Of course, and thank you. Super impressive respondents and very conclusive in terms of representing a broad array. Mitek is a technology company that specializes in providing identity verification, identity authentication, fraud management solutions to highly regulated industries. So banks obviously falling right within that wheelhouse for us. And nothing is more important for us in terms of how we build our roadmap, how we innovate, than hearing voice of customer. And because of American Banker's ability to attract this sort of response was super interesting for us. And we're wanting to future-proof what's coming down the line with identity. Where is the pain inside of organizations today from a technology standpoint, from a customer standpoint, from a managing process procedure standpoint, where they're experiencing pain, and how can we help that and build solutions that help them provide better experiences for their customers at the end of the day. So thank you. That was why we partnered with American Banker.
That's great. And I hope for everyone that's joining us today that that today's discussion and the research that we're sharing will really provide folks with a peer-based perspective on what's happening across the industry, right? So you can take a look at it, reflect maybe as you're looking at this data and listening to our conversation on, you know, where your own financial institution is on this journey. I think that's a really important opportunity, and we hope it's a key benefit that you walk away with. Okay, so let's dive into some of the data. I think we all know that improving the customer experience, certainly is and has been a key focus for banks over the last 3 to 5 years. And we've seen a really rapid acceleration in efforts to digitize the banking experience. It's, accelerated by all of the results, all of the sort of macro events that have happened for us in the last, 3 to 5 years. And so banks have been really focused on digitizing the banking experience to make it easier for customers to open accounts, to deposit money, to make payments and whatnot. And sometimes those efforts erred on the side of convenience. In fact, last year we released our State of Digital Banking research. And in that research, we found that just 1 in 3 respondents across the banking sector said that the risk of identity fraud was a key driver to their digital banking strategy. It was like on the number 6 on the list of drivers for digital banking. But if you fast forward 1 year and you look at that through a slightly different, but I still think a pretty comparable lens, what we're seeing now is that improving fraud prevention and mitigation ranks at the top of the list for banks when asked about their customer experience priorities for the year ahead. So that's a pretty significant shift, Cindy. And I'm certainly not suggesting that fraud has all of the sudden become a concern for banks, right? It has, of course, always been at the forefront of priorities, but this research seems to mark a shift in thinking about fraud as a key driver of customer experience initiatives, including those digital initiatives. And by that, I mean that it's really now those banks are really putting fraud at the center of the discussion and really on par with a focus on convenience rather than something that's solved in a silo, maybe in response to a new CX initiative. So I'm curious what you think maybe is behind, that convergence. Like, what's driving that?
Yeah, I think it's 2 main things. There's more than just these 2 elements, but if I could just summarize it in 2 main elements. One is obviously a macro event such as Gen AI is really allowing banks to do more extraordinary things for their customers as it relates to customer experience, but it's also enabling fraudsters to do extraordinary things and to find weakness in consumers' behavior. So, now we can, thanks to the convenience of cell phones in our pockets, we can do many things. And because of the sophistication of technology, fraud is just more sophisticated. And that leads to, fraud is bad. And bad fraud equals bad customer experience. And we know from other reports that surveys that we've done together that a customer or a consumer is more likely to switch a bank as a result of fraud than some of the other things that is going to cause them. That's the most likely one. And so they just have such a bad experience with fraud. And so what we're experiencing at Mitek when we're talking to banks and financial institutions, we see the buying committee or the decision makers around what fraud and what fraud technology they have in their bank expand. It's not just the risk officers or the fraud management or the product folks in that room right now. It really is just expanding to all parts of the bank as they think about how they can collectively solve fraud. Because at the end of the day, the bank is here to provide wonderful customer experience. And so fraud is stopping them from delivering that full customer experience. So that would be my answer to you.
Yeah, I mean, there's no doubt that the stakes are high, right? And to your point, when there is a breach or a fraudulent incident, it can have a pretty significant impact on customer loyalty and customer behaviors. So I think that's a really important concern that you elevated. I guess as a follow-up to that, I'm curious, Cindy, how you think regulatory concerns might be impacting this shift as well.
Yeah, regulation is really, when you think about Gen AI and those 2 factors that I just spoke about, as the sophistication of our tech, as the sophistication of our solutions increase, and as consumers demand more and more for less and less, for less trouble and more convenience, regulation has to step in and try and protect them. Because we can transact online from anywhere, from any device, from any channel, any time of the day. And regulation is there to protect the consumer. And that creates an incredible amount of energy inside the bank. It's not only do they have to comply, but they have to then say, well, what processes, what procedures, what technology, what personnel am I going to put against this, either this change in regulation or this strengthening of the regulation? It could even be a new piece of regulation. How am I equipped inside my bank? And that just raises costs for them. And so if it's raising costs for them around process, procedure, personnel, and tech, it also means that it's taking investment away from somewhere else. Could be innovation or what have you. They're also not necessarily equipped in this new regulation to answer all of the pieces, but they absolutely want to comply because non-compliance is very, very high consequence. And so they're looking for partners in their business that can really just take some of that pressure off and say, yeah, we're purpose-built to be compliant. We're purpose-built to stop fraud. And I would say that's why regulation peaks for them as well. And it will continue to, as we have to protect our consumers.
Absolutely. And, I think what's interesting too is that we all know that fraud can happen at any point in the customer journey. But as part of the research that we worked on with you here, we were really curious to understand for which types of customer interactions banks are most concerned about fraud. And what we found to be most often ranked as the top concern are ongoing day-to-day interactions. So that was number one, followed by re-verification moments. So you have a change of address or something, life change that causes you to have to re-verify, and then product origination and onboarding. And I'm curious, Cindy, what you think about how banks are rank ordering their concerns here and what it tells you about where we are in the fight against fraud today and the progress we've made or maybe still have yet to make.
So first and foremost, I think it's very reflective of the way that we think about it. And if you were to break it down, digital access or going online really became exaggerated and proliferant because of the COVID-19 pandemic. And all of a sudden, we needed to collectively get online so that we could transact, so that we could live, so that we could order groceries, so that we could book healthcare and so forth. And so as a collective, we became used to that digital onboarding process, protecting our consumer, protecting our organization. But the main point was just saying yes, getting everybody to be able to live in a digital environment as they sheltered indoors, right? And so the process was get online. It was a good process because at the end of the day, 99% of us just want to transact. We're not bad. We're just wanting to transact. And so there was a lot of focus on this onboarding, right? Get everybody online, get business going, secure commerce. And as that became real, and miraculously fast, fraudsters started to say, well, hang on a second, there's a surface that I can attack over here. And so in our collective, we became more focused on securing that front door. As digital access is now part of everyday life, powered by this magic device that we all carry in our pocket, we can do many things any time of the day from anywhere. And sometimes we become, completely relaxed in the way that we're accessing our bank accounts on a day-to-day basis. And we go in and check a balance, or we go in and make a transfer, and we don't think about it. Oh, yeah, I'm going to Zelle, $5 now. Oh, forgot to Zelle you that $10 too. And we're going back constantly. And so we're constantly engaging with our digital accounts in a more convenient way, with less thought, with less intention, because it's easy access. And so now all of a sudden fraudsters say, well, hang on a second. I don't have to just perpetrate at the front door. I can perpetrate anywhere, right? And so they're using combinations of more sophisticated technology, more sophisticated AI to help them perpetrate into every parts of our life. And as we as consumers get more relaxed about transacting online, we're dropping these breadcrumbs of identity. We're dropping these breadcrumbs of data that say, if you piece them all together, Mr. Fraudster, you could be Cindy, and you could take over my account. You could bust out, or whatever the case may be. And so we have to be very, very collective around this entire journey. not just the front door anymore, but the entire customer journey needs to be secure. The entire customer journey, we need to remind consumers to be aware, to protect your data, and to think a little bit about the transactions that we're taking.
And, I think that idea of the attack surface expanding beyond the front door, coupled with the fact that we're all becoming so much more relaxed about using all these various connective lanes back to our bank accounts and things, is a really interesting point, right? Like in trying to get people to keep, you're not really going to necessarily get people to keep their guard up. So again, like you said, trying to make sure people have access to the right tools to make sure that things stay secure. I mean, I was making a donation the other day to a charitable fundraising thing, and it was the first time that I'd been asked if I wanted to make that donation on Venmo, right? I was like, wow, that's interesting. Now they've even added Venmo to the list of ways that I can just so easily, I don't even have to put a credit card in or anything anymore. So it's very interesting. And to your point, it's only going to get, a little more complicated
and
as we
become
go on.
more relaxed, and the fraudsters become more sophisticated. And this combination is really where a fraudster can sneak in. And so we have a responsibility, not only in education like we're doing now, but if you think about the UI and the journey that the banks are taking this consumer on, you can use certain things. I'm taking your selfie now because of whatever, or do this because it protects you. And we can constantly use different parts of that journey to remind folks to be vigilant.
So, with that in mind, I mean, I think I think it's maybe not too surprising that a sizable portion of the leaders that we spoke to at banks are not terribly confident that the methods and tools that they're using are keeping up with the pace of fraud, right? We all know technology is going to be an important part of that fight, but they're not that confident that what they have in their toolkit is keeping up with the pace of fraud today. And that relatively sort of middling level of confidence exists in an environment in which 7 in 10 banking professionals report that modernizing their identity capabilities is a critical or high strategic priority for their bank. And on top of that, a similar proportion of respondents indicate spending to do just that, to modernize those identity capabilities, is expected to increase over the next 12 to 18 months. So it's a high priority, and they're investing accordingly, yet many are starting from this place of relatively low confidence and the ability of their chosen approaches and tools to keep pace with emerging fraud trends. So I think that underscores a lot of the difficulties we were just discussing and the things that banks are facing in trying to create that future-proofed identity strategy that you referred to in the beginning. So what do you see, Cindy, contributing to the challenges that banks face getting the right tools and solutions in place?
I think, depending on the size of your bank or the journey and their technology stack, that plays a role in it. I think the other part about it is how fast their consumers have adopted, biometrics, for instance, as a way to access their accounts, or how used to they are to an OTP. They've got all of these different elements that are fighting fraud across this life cycle. Sometimes the banks are grappling with the fact that their channels don't talk to one another. So I might be Cindy over here on my checking account, but I'm Cindy, a slightly different Cindy over here on my mortgage account. And so they battle with really understanding Cindy at the whole level. And now that Cindy is accessing all of my digital accounts equally, they've got to find ways to protect me equally, right? Because I'm expecting it on them, but they might not have all the appropriate information. So we also know that regulation, and we've just spoken about that, plays into it. So they might have improved certain areas of their business at a different pace that they've improved another one. So it really is that good old combination of people, process, technology. What do we need to do? And I spoke about this a little bit more, but this decision-making committee has expanded. Fraud is now just fraud is not just under the risk officer anymore. The customer experience person has always been aware of fraud, but now they think about it in a different way. Could we use security? Could we use safety? Could we use elements of protection as a customer experience element? Maybe, right? And so there's more interest. The reason why I believe that some are more confident in their methods than others is just about their agility and where they were in their budgeting process or their life cycle. But they all know that they have to do it now, and they have to be able to respond fast because of Gen AI and the changes that that brings into how the attack vectors are exposed. So it's really just a perfect storm, I think, and it's risen to very, very high levels within the bank. And we hope that as a collective, we can start to bring innovation so that it makes that decision making easier for them.
Yeah, and I think another complicating factor for banks is just the omni-channel nature of the customer experience, right? And if you just look at this, very simply from like digital, in-branch, call center, those three channels, if you ask banks where they think they're most effective at verifying and authenticating customers' identities, they'll most often say digital and in-branch channels. The highly effective is the dark blue, the moderately effective is the middle blue, right? So digital and in-branch channels are where they feel they are most effective. But if you slice that data a little differently and you look at it by size of bank, what you see is that the bigger banks feel more confident than the community banks and the credit unions in the effectiveness of their methods for verifying and authenticating customer identity in digital channels in particular. So why do we think this is important, Cindy?
Well, go back to the example of why digital channels are so easy for us. COVID-19, that's where we put all of our focus. That was all we could do. And so banks, there was call center, but there was no branch alternative. And so fraudsters, when that is a case, fraudsters go to the weakest link. Where can I get to take or thieve or steal or launder or whatever the case may be? Where's the weakest link? And so branches became popular, as did check fraud, for instance, also became popular, right? So they go to the place of least resistance. So I would answer that at the collective. I think I'll get to call centers in a minute. And then when you think about a branch, and you go back to my story around Cindy on all channels, the branch is still digital. It's more digitized than it's ever been, right? I walk into a branch, but I have to create a digital environment for them to prove who I am. And that's really good, because we want Cindy to be the same Cindy across all of these channels. But there is a human element in there, and it's always going to be there. Many of the bank's consumers just prefer that human element. There's certain transactions or there's certain use cases that they only want a branch environment. And so we've got to bring digital into the branch. And then we also bring digital into the call center. And when I think about this chart in front of us, and we think banks are slightly more comfortable that they have some sort of resilience in call centers, I just go straight to deepfakes. I think we are, even this week versus last week, I'm astonished by what is capable on deepfakes, voice cloning, injection attacks, anything. So if you imagine you're an agent in a physical branch, you could probably not have to deal with a deepfake, right? Because it's the person, and you would have to, okay, I don't have to worry about a deepfake. But in a call center, they really have to think about voice cloning. And is this a human or a bot? Is this the person, or is this a voice clone of a person? Like you've really got to be well equipped with a ton of different signals to verify that person in a call center. And in a digital environment, we've just put as a collective, as vendors that supply some of these solutions, we've put more energy into digital, and now we're starting to put it into the omni-channel.
And, all of that complexity, it obviously has a direct impact on us as customers and our customer experience, right? And I think we've all become I certainly have become very accustomed to wanting to just do things quickly and digitally. And I was recently trying to set up a wire transfer for some money from my bank to someone else. And I happened to be out of state. It was a regional bank. I wasn't in the area. And so I was trying to do it digitally and I couldn't do it. And so I called them up and they were like, oh, you have to come into the branch. You have to sign something. Like there was no way for me to accomplish what I was trying to do without physically being there. We went through all the other options. We could Zelle, we could do this, but there were reasons why none of those things would work, right? In that particular case, which led me to have to write a check and then like send that like overnight, then there's a whole check fraud concern, right? So then, we had to go through this very frustrating experience from a customer standpoint. Now I'm sitting in this industry, so, in the back of my brain, I understand why I'm getting these roadblocks, right? Because I research this stuff. I talk to people like you. I know why they're throwing up these things. And I know inherently it's in my best interest. But in that moment, I'm just feeling really frustrated that I can't get from point A to point B the way I want to, right? And so it's just kind of interesting how it plays out from a customer POV.
And I love that example, Janet, because you kind of pulled our whole conversation that we've been talking about all the way through, taking it all the way back to customer experience and why banks are concerned about fraud and customer experience and how they're so connected right now. Because if you weren't in the industry, you would have been frustrated. And so the bank would have been saying, oh, well, that might have been, could we have done it on a more digital channel for Janet? If they had known more about you, you might have been preserved of having to go into a branch. But even when you into a branch, they need to know the whole Janet, right? So you kind of bring it all the way through. And all of these elements make Janet somebody that the bank wants to protect. And the decision almost, like, have we seen fraud from Janet before? No. Have we done these things from Janet before? No. So then it becomes an opportunity for them to say yes to you with very low risk. And so it really is about how do we collect the right information about Janet so that we can enable transactions across all of the channels while protecting her and preserving customer experience.
Yeah, it's tricky. And before I go to the next slide, I just want to remind the audience that you can submit questions in the Q&A panel here. So if you have questions, please drop them in there, and Cindy and I will try to get to some when we get to the conclusion of the slide. So don't hesitate to put them in there if you have things that are coming up. Okay, so moving on. I think this is really interesting data because we dug a little more deeply into the methods that banks are using to verify and authenticate a customer's identity in the various channels. In digital, in branch, call center, and it revealed some interesting patterns. I think that what it shows overall is that banks are more widely embracing a variety of approaches in digital channels as compared to in-branch and call center channels. So that suggests maybe an over-reliance on a handful of methods for in-branch and call center interactions that could be failing to provide the best and maybe the most appropriately secure customer experiences. So if you look at this, for example, ID document verification and PINs and passwords are the two most widely used methods to verify and authenticate a customer identity in branch. Well, if it's a call center, it's PINs, passwords, and passcodes. And at the same time, the more like modern technologies like digital certificates and digital ID verification, physical and behavioral biometrics, those show up frequently in digital channels, but they're not as widely used elsewhere, which I think is interesting given your comment about even the branch needs to be digital, right? So I guess I'm curious, Cindy, where and why you think banks should be looking to cross-pollinate and extend tools that are used in one channel into another.
So the example that I like to use when I talk about this with our product teams and our innovation teams is think about you're a passenger at an airport, right? And if you're just somebody that doesn't travel a lot, you probably show up with your boarding pass or you get it there and you go into a regular line. But if you're somebody who travels a little bit more, you may have applied for a TSA pre-check. And then in North America, you have the option to have a pre-check. And then that pre-check, when you applied for it, they asked for credentials that you provided, and then they approved you. They approved you to do certain things so that you could go in a line that went faster through the security check. And now we have it, the premium of that is that you pay a little bit more to a more regulated environment and you get Clear, which goes even faster. And Clear know more information about you. And they've double clicked on who Cindy is so that I can pass through Clear and go super fast. And all of that is really just about how much information have these institutions collected about me so that I can go faster through a security checkpoint. And I like to put that into a banking environment. The more good information, even the more bad information they have about me that proves that I'm legitimate, that I'm, Cindy, these are my documents. This is my biometric. This is my voice and face biometric. And perhaps now that you have all of the credentials and I've not done anything bad, I might be able to transact right across all the banking channels in a more convenient way. Whereas if you don't have a lot of information about me, you're going to have to pattern match and make me do more things, and it slows me down. It slows the convenience down. In today's world, biometrics, we use them not only in travel and not only to access our apps on our phones for convenience, but we actually use them and they're very secure. And they're most secure when they're used in a layer or a combination of working with biometrics together. My face and my voice is more powerful than just my face or just my voice. And so some of these new technologies are available and they're there to help us move between the bank and the transactions within the bank. Couple that with the fact that you already have my ID on file and you're comparing my face to that document on file. And then along comes deepfakes. So we think we're making progress, and then along comes Gen AI and the inordinate way that folks can create deepfakes today. Now all of a sudden we don't have to just prove that it's Cindy. We have to say that this is Cindy, not a machine. That this is actually legitimately a human, right? And so you'll probably see some of these trends move up and down as the sophistication of the technology and the collective of those signals come together. And it's going to require first and third party. There's not one sole vendor that does all of this seamlessly. And there's not one bank that has the right platform to do this seamlessly. It's going to require a strategy, however, on how do we get the best information about Cindy, so that Cindy can move between the banks, as opposed to, oh, I've seen Cindy over here in the checking account, but she hasn't visited mortgage for a long time, so I'm going to have to make her jump through hoops. And so it's going to have to be, how can we get this information about Cindy, just like my Clear situation that will help me move through the bank? Long-winded way, but I hope that it's illustrative.
It is. And I was just thinking, like, if they knew that Cindy was researching moving companies, then they would know that that's why you're now back at the mortgage piece.
Correct.
Right? So,
Correct.
So
a great example of how that data
moving
together, can be more powerful and secure, right?
Yeah, and it's a great transition to the next thing that we're going to talk about, right? Which is about AI and how the accelerated use of AI in banking is making its way into many identity tools, which you talked about earlier. It's helping to prevent fraud. At the same time, it's opening the door for fraudsters. And AI is fueled by data. And so this idea of, like, if they had more data about Cindy, right, then they would be able to more effectively assess the risk. And consortium data is maybe one way that we can get closer to that goal. Your idea of using first and third party tools, there's first and third party data. So if banks and other stakeholders work together to share data about financial crimes and fraud for the benefit of everybody, that could be really impactful. So we asked the folks taking the survey how they felt about consortium data. And, it was viewed as a critical or very important tool by a significant majority of bankers, particularly global, national, and regional banks. But we kind of paired that sentiment question with a usage question too, right? So we wanted to know, do you think consortium data would be valuable? Most folks said, yeah, I think it could be a really valuable tool for fighting fraud. But when you dig into how many people are already participating, how many banks and financial institutions are already participating in a data consortium, how many are very likely or somewhat likely to do so. So the green is already participating. The two shades of blue are the very or somewhat likelies, and then not likely and unsure. What you see is that only 16% overall are actively participating. That usage goes up quite a bit for the largest banks to about 29%, but industry-wide it's about 16%. And just 1 in 3 report that their institutions are very likely to participate in a data consortium with like organizations as a way to combat fraud. So what's your perspective on that? What's your perspective on the value of data consortiums in a bank's fraud strategy, and even more specifically in their identity verification and authentication strategies?
I think these 2 slides are very reflective of what we've heard from customers. And there is this undeniable shift that we as a collective within the financial services industry need to fight against fraud, who is the common enemy. And a consortium allows us to do that. And so, you know, it's I don't want to say it's a give to get, but think about it that way. You know, particularly my eyes drawn to the middle, to the 38% on here that are very likely to, who just can't right now because of the size of their bank. But if they were a part of a consortium, it allows them a whole bunch of access that they haven't, data that they haven't got today. Even if they would put all their data from all their channels together, plus our tools and whatever else, they wouldn't be able to understand what's happening outside of their 4 walls. They wouldn't be able to take advantage of the patterns of bad behavior that fraudsters are doing. And so consortiums of data allow us, particularly with the combination of Gen AI, to pattern and archetype behaviors. And so good behaviors are just as powerful as bad behaviors. And so if we notice through our, let's pick on check, which is one area of fraud that we specialize in, but we see the patterns in fraud, that this is how the fraudsters are behaving. We can say, okay, that's a pattern. And then when we correlate that to a pattern on account takeover fraud, you see it's got patterns in it, that fraudsters behave like fraudsters, and you can apply that in terms of making predictions around what's going to happen. And so, you know, I'm obviously very interested in how we can be a collective and work together to stop and combat fraud and protect our consumers and give them a wonderful consumer experience. But we've got to act on it too, right? And it's scary because data is a scary thing. It's highly regulated, first and foremost. And so we have to do this in a responsible way. But, you know, as this industry of financial services comes together, we can do this, run some experiments, figure it out, but then it's going to be powerful, and it's going to be a common combative way to stop the fraud that none of us want in our channels.
It's going to be really interesting to see, like if we were to do this research in a year, it'll be interesting to see how much momentum we see sort of building around this topic and around consortiums in general over time.
Absolutely. And it's not that this is our first consortium. I know that banks participate in fraud consortiums today. I just think the onslaught and the onslaught and availability of data is slightly different to what might be existing in the banks today. And how do we use that collectively? And it's different over region too. And so really exciting opportunity for us to come together.
Yeah, I mean, we're really just focused on U.S. banks here, but yeah, you make a good point that it probably, if we expanded this conversation to more of a global footprint, we'd even have more to talk about there. So that's really interesting. So one of the final points I want to talk about with you today is just about introducing the right amount of friction, right? We as we were framing out this research, we were calling it frictionless fraud, but that's not really possible, right? Like solving this challenge isn't easy. And, I think banking leaders in general face a number of challenges in their efforts to prevent new account fraud or account takeover fraud within the customer verification and authentication experience specifically, right? And there's no way to make it frictionless. But what you see in terms of like their list of concerns, like what are their biggest pain points when they're trying to solve for this? It's first providing customer authentication options that customers feel comfortable and safe using. So tools and tech that are known and trusted or are at least familiar to people, right? And of course, that's changed over time. Biometrics has really become more of a part of our, like you said, our daily interaction with our phone, even with Face ID and things like that. So that's number one. Is it a technology that people recognize, that they trust, et cetera? Following that is removing or reducing friction from the customer experience, and then separating legitimate customer interactions from potentially fraudulent ones, right? So how do you know this is the real Cindy and not, a deep fake Cindy? And then rounding out the top 5 barriers is the ability to adapt their approach depending on the level of risk, and then maintaining compliance with regulatory requirements, which we talked about previously. But this battle to remove friction from the customer experience is interesting because it's really about introducing the right amount of friction, right? I mean, where do you go from there?
Yeah, I mean, I think you use the word familiar. So what, and a bank's consumers are on different spectrums on digital adoption or technology adoption. But a biometric is yours and it's uniquely yours. And I think it's rapid adoption. People are familiar. When you think about at first, when you opened a new account and you had to put your face in the circle and, deliver a selfie, that was like, oh gosh, what am I being asked to do? But it's still less friction than making up a password. And as you're making up that password, you A, hate it, know that it's going to get forgotten. B, you got to write it down somewhere because you're going to forget what it was. C, you want it to be secure, but you don't, which special character do you have to give it? And so there's this adoption to biometrics to access because, as what you say, it's familiar, but it's also friendly. It's simple and it's easy to use. And we don't want it to be difficult for folks, but we want it to be secure. So I love the word familiar that you use, but I also think that friendly is another way, like it's friendly. But at the same time, when it's too fast, oh my gosh, I'm just suddenly in my bank account, you're kind of looking around saying, why was that so seamless? Am I in the right place? Is this secure? Is anybody looking out for me? Or is this going to be just as easy for a fraudster to get into me? So that's where we all continue to struggle with what is the right amount of friction. And I always just say a little bit of friction goes a very long way, because whilst that is proving that that's Cindy's face, you could give them a little message that says, thank you, just proving you are who you are. Or just talk to them, because we're talking to computers just as we are right now talking, right? It just talk and communicate in a language. Use it as an opportunity to express your brand. Just double checking that's you, keeping you safe, or whatever the case may be. And then as you use Gen AI and as you use the consortium and get more sophisticated about this is Cindy or this is Janet entering their account, you could speed that up. So then when I'm going through the rest of my accounts and I'm just accessing, you only have to double click on me every 10th time or whatever the case may be, but you do it in such a way that you set rules and you set boundaries for this experience. I think as fraudsters go, where this happens on these particular graphs is going to change because regulation is going to have to change. And so some of this friendly friction is going to get less friendly. And I think consumers are going to be okay with that. There was a study that we did together, actually, I'm going back about 3 or 4 years now, where a North American consumer trusted their bank more than their government to protect them. And if anybody wants to protect any account, it's their bank account. And so we do have a little bit of leniency here. I'm not saying that it's hard friction. I'm just saying that make it friendly friction, so that your consumer feels confident that, oh, I love my bank because they just take care of me, and friendly friction.
I love friendly friction. And your point about trust is a good one, right? Banks do have an inherent advantage. We've done a lot of research on that. And if you compare the banking sector to pretty much any other sector out there, consumers will generally say that trust is the thing that where banking leads. Like, they do trust banks to keep their data, to keep their money safe and secure. And so we do have, kind of an advantage sort of stepping into this space. But as you said, like, we've earned that trust, but now we don't want to undermine it, by taking the wrong actions. We're at the point where we're going to take some questions from the audience. So if you have any questions, again, please put them in the Q&A, and we would be happy to address them. I do see one question about consortiums, and this individual is asking, how are consortiums different from partnerships? Do you have a perspective on that?
Yeah, and thank you for the question. A partnership, I want to make sure that I'm understanding the question, because it could be translated in different ways. So when we think about a partnership, there could be more than two people in that partnership, but it's typically fewer. Like, a partnership is Cindy with Janet, but a consortium would be all of us on this call and sharing data, right? So first and foremost, I think it's the scale would be my very short answer. But the second one is that a consortium is really around, I'm only in this group because I choose to be in this group, and I'm going to give data, and I'm going to share that data with you, and you're going to give me data, and collectively we're going to share. And because it's a really broad group, with Gen AI, we can do magic with that data. Whereas if it was just a partnership, it would be fewer folks, and it would be restricted to just what those two or few people want to do together. Whereas a consortium has its benefits set up first, and then everybody chooses to be a part of that consortium. This is a consortium for fighting fraud. This is a consortium for sharing data so that we can get more sophisticated and innovate ahead of fraudsters. This is a consortium that's going to give X, Y, and Z. But in order to get X, Y, and Z, you need to give A, B, and C. And so I hope that I've answered this person's question, but I would think about it as a growing collective of data. As a partnership is, I'm just sharing back and forth.
Right. And your point about Gen AI really enabling the use of that data in very impactful ways is a really good one. And I think we are at a very interesting point in history right now, to see really what's going to unfold over the next couple of years with Gen AI and other tools to help us do that. I don't see any other questions at this time, so I want to just mention a couple of things. At first, I really want to thank you, Cindy, for joining and sharing your thoughts on this topic. It's been fun to talk about it. We recently had the pleasure of speaking about it at our digital banking conference, so I'm glad we got to revisit the topic for the audience today. For everybody attending, you can download a copy of today's slides from the webinar portal. And if you'd like to see the full editorial research report that American Banker wrote in partnership with Mitek, you can scan the QR code here on this slide. So again, I just want to thank everybody for taking time out of your day to join us today. And I want to give a big thank you to Mitek for partnering with us on this research and sponsoring today's webinar. So thank you, Cindy.
Of course, and it's been an absolute pleasure to partner with you on this research. And thanks for the great questions. And I look forward to seeing you at the next digital banking conference.
Great. Thank you all. Have a great day, everyone.